Alright guys, welcome back to my channel. This is the Alpha Trade. Today I'll do the second part of the video. In the previous video I showed you guys how to catch spike using the moving average and the average true range. Okay guys, and I told you guys the way it works on boom 1000 and boom 500 is not the same way it works on crash 1000 and crash 500. So guys, the last one I did it on on boom 1000 and boom 500. So today I want to show you guys how it works on crash 1000 and crash 500. So this is how it works. I'm going to start. First of all, I'll show you guys the zoom level. Then secondly, I'll show you guys how to get the trend, because what I do, I get the zoom level first, then I get the trend. When I've gotten the trend, then I will start looking out. Then I will drag I'll drag the chart to the left side of the screen. Then I will start looking out for other parameters to catch the spikes. I'll show you guys all these. Then in the end, I'll show you guys the setup of this strategy. For those of you that did not watch the previous video, I'll show you guys the setup. Okay, so don't worry, I'll show you the setup. But before I continue, I would like you guys to subscribe to this channel. If this is your first time or you've not subscribed yet, I want you to subscribe to this channel and then give this video a thumbs up. It will really go a long way in helping me. This is a free content, so the best can do for me is to subscribe and to give it a thumbs up. Also, I would like you to turn on the notification bell so that whenever I post a new video, you get notified. Okay, so you'll be among the first people to watch, because I have lots of other strategies I will show you that will help your trading career. Okay, so we also have Telegram channels where you can join. There I do drop signals. I also drop some strategies and some mentorship in the free channel, but we also have a VIP channel. So if you really want to get VIP benefits, you will also send me a message on the Telegram. Then I will tell you how to be a part of the VIP channel. Also, we have our TAT Project 9 that is coming up in the month of September. If you have been watching the videos, my videos, you would have known about it. You have heard me talking about it. A 4-week intensive seminar that will be coming up in the month of September. That's why we call it TAT Project 9. It is a project that we accomplish in the month of September. The 4 weeks of September, we are going to have a very intensive Forex seminar on WhatsApp. So I'm going to share I'm going to drop the WhatsApp link in the description box. If you want to be a part of it, like I tell people, go for the knowledge before you go for the money. So if you want to be a part of it, just click the WhatsApp link in the description box. And then you'll be taken to the open group. The group is the landing ground. It's the landing ground for people coming from different platforms. So if you get there, then you see how to join the official group. I'll send you the link for the official group. It costs a token. It is not actually free. It costs a token to join the official WhatsApp link, just $20, and then you are part of it. And I promise you are going to get value for your money. You are going to learn a lot. Okay, now let's go straight into the strategy. Let's go straight into how the strategy works. The first thing, I'll zoom out completely. You can see this. After I've zoomed out completely, this is the last zoom level here. Okay guys, so this is the first zoom level. We take this as our first zoom level. Now you zoom out to your third zoom level. So this is the first. What you do, you zoom out. This is the second zoom level now. Okay, I'll zoom out again. This is the third zoom level. Very good. At this point, you are good to go. You have gotten the first step. You take the chart to the third zoom level. That is the first step. Then secondly, you go for your trend. That's why we have this moving average in the main chart. The moving average in the main chart has only one purpose: to show us the trend. You can see this moving average here, this red moving average. Its purpose is to show us the trend of the chart. Okay, so for you to know the trend, you go to M15. I use M15 for this. You can see all the way here it has been on the downtrend from this point down to this point. It has been on a downtrend, as the indicator has shown us here, this moving average. But look at it here, it has started retracing. You can see this, it is retracing. So this tells us that spikes will occur, but it will not be frequent like the way it happened when it was on a downtrend. It will not be occurring frequently here. So you need to look out for special zones. Like now, you can see it moved all the way from here, this level, and went up without much spikes. So if maybe you have been following the indicators trying to catch spike within here, you might have had a lot of losses. So that's why you need to check out the trend, guys. So follow the rules, because it is not, sometimes the strategy might be very powerful, but your inability to follow the rules strictly will make you lose a lot. So you can see it moved all the way from this point to here. It has not spiked, it has not given any spike. Okay, so but look at this point. When it is an uptrend, you know, this is crash. It spikes when it is selling. It spikes during a downtrend. Okay, so but during an uptrend it also spikes, but the thing is that it is usually within some specific zones, some very significant zones. Like here we are very close to this zone. This point here is a resistance zone here. You can see it's a resistance zone here, and over here it is close to a support zone here. So at this point we expect to have to spike here. You expect some spike at this point, okay, because of this resistance here. We expect to have spikes here. So now you know that when it gets here, you can actually mark it. You can bring your horizontal. I bring my horizontal to this point. When it gets here, I know that I should start following my signal. I should go for a spike here. Okay, so after you have done this, you have detected your trends, you have seen what is happening in the bigger picture, you go back to your M1. It is at the M1 that we catch spikes. Okay, come back to your M1. My goodness, my battery is 1%. Come back to your M1. All right, now when you have come back to your M1, the next thing to do is to click and hold your screen. You can see this. You click and hold your screen, then you will drag it to the left end of your screen. Drag to the left end until it's not able to move again, to the left end. Then tap the screen. The settings. Okay, now the next thing is take note of where the indicator aligns with your chart. You can see the last candlestick. Use your cross hair to find out this. Use your cross hair. If you carry the cross hair to the last candlestick, this is last candlestick here, this is last candlestick here, you can see the alignment. You can see how it aligns at this point with the indicators. Look at where they align, exactly in front of this M in the indicator window, exactly in front of the M in the indicator window. Okay, so this is the point here. So at this point, the indicators will give you the right signal. But if you take it to this point, maybe you take it to another point, you see the signal changes. It will not give you the right signal, guys. It will not give you the right signal. So that is why you need to drag it to this last point. Okay, now like I told you earlier, it is giving us the signal to go for a spike. Now we can actually enter for a spike, but it can give you this signal around here. You will not need to rush in, because this is, at this point it is trending upward, it is going back upward, it is tracing upward. So you need to wait for it to get to your this resistance zone. You can see this is our resistance zone. Okay, so this is our resistance zone here, and then you need to wait for it to get close, and as soon as it gets there, you go for a spike. You try to catch the spike. Okay, so that is, so as soon as it gets here, you begin to go for a spike. Now that it's going upwards, you don't rush to enter your position. You don't rush because it doesn't spike that easily. Okay, now let me backtest a little to show you how it works, to show you some examples of how these strategies work. Now take note, let us take note that our the point where they are aligned is this M here, in front of this M, in front of this M here. Okay, that's the point where they align at this point. This is it, this alignment point. So I'll be taking it here for us to backtest. Let's do the backtesting to see how it works. Now take notice of this. During this how this indicator works, how this strategy works is that the moving average, for you to know that it's about to spike, the moving average must go up. Guys, look at this. This is very important. This is the thing, this is the most important point for you to catch. The moving average must go to the overbought zone. Can you see it, guys? The moving average must be around the overbought zone, just as it is here. It must be around the overbought zone. Then the average through range, this is the most important point for you to catch. The average through range must be at the oversold zone. Guys, you can see this, right? The average through range is this one in blue color, sorry, in green color. This very indicator in green color, this very one here in green color, that is the average through range. Then the moving average is this one in blue color. I guess you can see it, guys. So it must, the moving average, which is this one in blue color, must be at the overbought zone. It must be at the overbought zone. It must be at the overbought zone. Why the average through range must be at the oversold zone. This is what you must take notice of. It must be at the oversold zone. Okay, do you see it? It just spiked now, exactly where I told you to spike. Exactly, look at it. It just spiked here, guys. I told you this strategy is very powerful. Wow, it just spiked. Look at it, look at it, look at my horizontals. Look at my horizontal here. It just spiked here, just here, with a very minimal drawdown. It just spiked, guys. I told you this strategy. Look at, had it been that we open the trade here, just see the drawdown. If you open the trade here, the drawdown is just from here to this point, only 1 pip, only 1 pip, very minimal, just 1 pip. So assuming you are using a lot size of about say about 5.0, you would have just had only $5 risk, and then you are catching all these pips down to this point. It spiked. The spike gave us about 12, over 12 pips. You see, it would have been 1 to 12 risk ratio. The risk reward ratio would have been 1 to 12. So this is how powerful the strategy can be. So you see it. Now let us back test to see other this thing. Now we bring this one. Let me show you this one. This is a spike. Let's bring it in front of this M. That is the point of alignment. Okay, the point here at this point, you can see the moving average is above. It is within the overbought zone. Look at it here, at the overbought zone. Look at it. Then why the average through range is at the overbought zone here. This is at the overbought zone. So you can see it now at this point. When the two indicators are in alignment, when the both of them are in alignment, you can see the heavy spike. They began to spike. At this point, it gave us a spike here. Then the moving average was still above, so it was still spiking. Came here, it spiked. Came here, it spiked. Came here, it spiked again. until all this point. So the reason it gave us a wrong signal here is because the signal has been on already, so it wanted to complete the move. That is why I tell my students, wait for the right signal. Look at this point, the indicator, this moving average, it came to this overbought zone, and then why this one, the average through range came to the oversold zone. And so you can see that our confluences have been met. At this point, you just style crazily, guys. Let's see another example. Look at this. Look at this, guy. Wow, this is so, this strategy is so powerful, so powerful. Look at it here. Look at this here. Okay, this is our point of alignment. Now look at it. When the moving average was at the overbought zone, look at it here, it was at the overbought zone, and then the average through range was at the oversold zone. You can see what happened here. It began to give series of spikes. It continued to spike until the moving average came to this point. Is crash 500. So I'm also going to show you how this strategy works. So crash 500, and then after that I'll show you the setup. For those of you who have not watched the other video, but if you haven't watched the other video on how to use this same strategy on boom 1000 and boom 500, I strongly recommend you watch the video. It is immediately before this one. The video you get immediately before you get this one. That is the video. So this is crash 500. So you can see how this same strategy works. Like I told you, it works for both boom and crash, but differently. Now look at this. Here we've drawn it to the extreme end of we've drawn the chart to the extreme end, and so at this point, guys, remember I told you you have to find the point where the chart aligns with the indicator, and using this cross here and placing it on the last candle, we can see where it aligns with our indicator. You can see where the indicator and the chart align. You can see just in between this just here, in between the zero and the between the zero here, just here between the zeros and the MA. Okay, this is where they align. So this is the point we will be getting the right signal. Okay, guys, so we are going to test and back test a little so you can see how it works. Now look at this. Let's begin to back test. Okay, now we are looking for where our confluence was met, our condition was met. Like I told you earlier, we have our moving average and average through range. For you to say you've gotten the right signal, or you are getting a signal to catch a spike, I told you that the moving average must be at the overbought zone. Must be at the overbought zone. Why the it must be at the overbought zone here. Why the average through range must be at the oversold zone. All right, the moving average takes the same direction. It takes the same direction with the chart, whereas the average through range goes the opposite direction. All right, so like you can see here, the average through range is at the oversold zone, while the moving average is also at the oversold zone. So at this point, we are not expecting any spike now, because our condition has not been met. Okay, all right guys, you can see it now. Look at what happened here. At this point, our moving average, just look at it, look at this moving average. You can see this. Just follow this arrow and see what's happened there. The moving average is at the overbought zone, while the average through range is at the oversold zone. You can see it, and this is the point, the signal. Okay, this is the point here. You can see, and at this point, if you go for a spike, here, you can see you would have gotten all this. This is the power of the strategy, guys. See how long it went. It kept spiking all the way. To this point. This one, you are catching multiple spikes. Look at, can see the peep. Let me show you the peep page. You can see from that point to this point, a lot of pips, about 77 pips, from this point. So this is how this strategy works. If you go back and still see, coming to the in between this 0 and 100 level. If you still go back, good. This is another good example here. Some of you be saying some of you be like, is what about these other places that is spiked even before, even when the indicator had not showed us a spiking sign? Well, the truth is that you don't have to take all this. If you pursue all the spikes, you will blow your account. That's the truth. If you chase all the spikes, you will blow your account. So you work according to the rules of this strategy. If you are using this very strategy I'm telling you about, then you have to play by the rules. Now look at this, guys. You can see at this point, look at this point, you can see our conditions got met again. The moving average is here at the overbought zone, while the average through range is here at the oversold zone, and you can see it spiked all the way to this point. If we are to check the pips, the pip page, you can still see it's more than a single spike. Actually, it's more than a single spike. So look at it, about 48 pips, and so you are bagging a lot of profit. You can use this strategy to raise a very small account. You can even use it to raise account of $5, account of $10, and even $100 and more. You can use it to build and grow a very small account within a short time, if you can abide by the rules of the game. You know, one thing is that you don't have to try to play tricks on the game. You cannot play tricks on the market. You have to follow the rules. I have shown you the rules of using this strategy. Once you default in following the rules, then you might be getting a different result altogether. Okay, guys, let me show you another example. This is also another example here. You can see this one at this point. Look at it here. At this point, the moving average was also at the oversold zone. The moving average was at the overbought zone, while the average through range was at the oversold zone. And you can see the spike here. You can see how it spiked from here. Just give a spike. So this is the strategy. If you follow it strictly, you won't go wrong. Remember, you need to know you need to have in mind the zoom level. You need to also have in mind how to check the trend first, because you must check the trend you catch spikes more easily when it is on a downtrend. If it is not on a downtrend, then you might be losing while chasing spike. So follow the rules, not when you use your own rules and then you come back and tell me that the strategy doesn't work. I won't take that, because I have tested this strategy and it works very well. It works very well. Look at another example here. You can see the average the moving average is at the overbought zone, and the average true range is at the oversold zone, and you can see the number of spikes it gave. You can see the number of spikes all the way from here down here. You can see that is the part of this strategy. Okay, so I haven't shown you guys all this. Let me now show you the settings. Okay, firstly, here I have the moving average. This is the one you see in the main chart, the one we use for trend detection. Trend detection rather. So I'll show you guys how to use it. Now this moving average, the period is 20, the shift is 0, method is simple, on the apply to close, right? Pixel is 4 and then the color is red, and that is, I just click done. And then the next one is in the ones in the indicator with the one, you have the stochastic oscillator. The K period is 5. Well, you can just leave this at the default setting because you don't really need all this. Then there is what you need is the level. So when you come to the style, the color must be white. If your background is white, just try to make the color here to be the same with your background so that it will not show. So the main, you put the color white, the signal, you make the color to be white. Then you come to the levels. This is the only thing we need, the levels. Click on the levels, come here. First level is 15, the second level is 50, and then the third level is 85. Okay, the pixel is 4, the style is 4 pixel, and the color is red. All right, so just go back and click done. Then the next one here will be, let's go for the next indicator, which is the moving average also. Then the period is 20, the shift is 0, and the method is exponential. And then apply to close. Style is 4 pixel, and then color is blue. Then no level, just forget about the level, we don't need it. Click done. Okay, the next indicator also will be the average true range. The period is 14, and then the style is 4 pixel, the color is green. You can see it here, color is green. Okay, you can see it here, the color is green, right? That is it, you are done. Just click done. Okay, so it is very simple. The indicator is ready to use. Okay, indicator is fully set. So at this point you can begin to use it to catch spikes on crash. Remember, you go for spikes when the moving average in the indicator window is at the over. This is what I mean, when the moving average is at the overbought zone, and then when the average true range is at the oversold zone. Okay, that's when you go for a spike, and before that you come to your 15 minutes time frame to know the current trend. All right, that's how it works, guys. Okay, so I want to remind you of that project 9, a mega seminar that is coming up month of September, beginning from the 4th of September. We're going to be having an intensive class for about 4 weeks, the 4 weeks of September, we'll be having an intensive class teaching you how to trade the synthetic markets, how you can trade boom and crash and volatility index. Okay, I want you to join the class. I will be dropping the WhatsApp link in the description box so that you can get more details on how to join on how to be a part of it. It's just going to be on WhatsApp. Okay, you're going to be on WhatsApp. So if you're interested, you click the WhatsApp link. Also, we are on Telegram. You can also I will be dropping the Telegram link also in the description box, so you guys can also join our Telegram platform and be part of the family and trade our signals. We also have a VIP channel where you come to the free Telegram group. You will see the VIP channel if you want it. Okay,